Ibrahim Traoré's gold gamble is starting to pay off. Burkina Faso's military government is riding a mining boom with record production, rising revenues, and fresh international funding.
In June 2025, a 37-year-old military captain wiped billions off global mining stocks. With a single signature, Captain Ibrahim Traoré, Burkina Faso's junta leader, signed a decree nationalizing 5 gold mines, seizing assets from one of the world's largest producers, and paying roughly 25 cents on the dollar. Trading halted, stocks cratered, and mining executives from London to Toronto started asking the same question: are we next? This is the story of how a young captain in combat fatigues took on the world's mining giants, and what it means for every foreign company digging gold, copper, or cobalt out of African soil. Burkina Faso is Africa's 4th largest gold producer, pulling about 94 tons out of the ground in 2025 alone. At current prices above $2,500 an ounce, that's roughly $7.5 billion worth of gold annually. Yet 2/3 of the population lives in poverty. That disconnect between mineral wealth and human development has fueled resentment for decades. Captain Ibrahim Traoré seized power in a 2022 coup, the second that year, and he immediately began rewriting the rules. In 2024, his government revised the mining code to require 15 to 30% state ownership in all mining projects. They created SOPAMIB, a state-owned mining company, to hold these stakes directly. Then came the hammer. In August 2024, Burkina Faso nationalized the Boungou and Wagnion gold mines, previously operated by London-listed Endeavour Mining, for about $80 million. The problem? Those assets had been valued at $300 million in a pending sale. The government paid roughly 25 cents on the dollar. By June 2025, SOPAMIB had absorbed 5 mining assets, 2 operating mines, and 3 exploration licenses. Endeavour, once the country's largest private employer, saw its Burkina operations effectively erased from its portfolio. The company issued careful press releases about constructive dialogue, but the stock told the real story. Traoré isn't acting alone. Burkina Faso is part of the alliance of Sahel states, a bloc formed with Mali and Niger after all 3 withdrew from COAS in early 2025. All 3 are military-led. All 3 have expelled French troops, and all 3 are aggressively nationalizing natural resources. In Mali, the playbook has been even more aggressive. The military government seized 3 tons of gold, worth about $245 million, from Barrick's Loulo Gounkoto complex in January 2025. They blocked exports, detained employees, and eventually placed the mine under state administration. Barrick, one of the world's largest gold miners, was forced to suspend operations at what had been 14% of its global production. The dispute dragged on for months before a reported $430 million settlement. The Sahel juntas share a common narrative. Decades of foreign extraction left their people poor, while multinational shareholders got rich. Whether you agree with that framing or not, it resonates deeply with populations who've seen gold trucks roll out while hospitals lack basic medicine. And here's where geopolitics gets interesting. As these governments cut ties with the West, they've pivoted hard toward Russia. Wagner Group mercenaries now operate in all 3 countries. And while Western miners face seizures and arbitration, Russia's Nordgold received a new mining license in Burkina Faso in early 2025. Favorable terms, commitments for local processing. The contrast is stark. Western companies negotiate from courtrooms. Russian operators negotiate over handshakes. The strategy is clear. Use resource nationalism to fund security operations, while building new alliances with non-Western powers. Now let me be specific about who's caught in the crossfire, because this isn't just about companies you've never heard of, operating in places you'll never visit. In Burkina Faso, IAMGOLD operates the Essakane mine, the country's largest gold operation, and derives about 80% of its production from that single asset. 80%. When Traoré announced permit reviews in late 2024, IAMGOLD's stock dropped 15% in a single session. The company has since announced $165 million in continued investment for 2026. West African Resources operates the Sanbrado mine and is developing the Kiaka project. The government has already requested an additional 35% stake in Kiaka, beyond the standard ownership requirements. Orezone Gold operates the Bambara mine and has been told the government won't force equity purchases, but the uncertainty persists. Here's why this matters beyond individual stocks. In Mali, beyond Barrick's troubles, B2 Gold operates the Fekola mine and has seen production decline while navigating the new mining code. Allied Gold's Sadiola mine reported similar challenges. Mali's industrial gold output fell 32% through August 2025 compared to the prior year. 32%. Largely due to the Barrick shutdown and broader uncertainty. Now here's the contagion risk, and this is the part that should concern you. Ghana, Africa's largest gold producer, established a gold board in 2025 that now acts as mandatory intermediary for all gold transactions, capturing $5 billion in exports within its first 5 months. The government has also signaled it wants Ghanaian ownership of certain assets. Tanzania revised its mining code to require local ownership and has been aggressive on tax enforcement. The DRC has been renegotiating its copper and cobalt deals with Chinese operators, successfully increasing its stake in key joint ventures. The pattern is consistent. Governments are demanding bigger slices of the pie. And they have leverage, because global demand for gold, copper, and battery minerals keeps rising. Here's the complicated part. Burkina Faso's nationalization is working, at least by certain metrics. The government claims $18 billion in gold revenue since Traoré took power in 2022. State-controlled entities collected over 8 tons of gold in 2024, and more than 11 tons in just the first quarter of 2025. They've built Africa's first national gold refinery, with 150 tons of annual capacity. And the IMF, not exactly known for praising military juntas, noted that Burkina Faso made commendable progress on domestic revenue collection. But there are real questions about sustainability. About 40% of Burkina Faso's territory remains outside government control due to the Islamist insurgency. Armed groups tax informal gold miners in areas the military can't reach. Foreign direct investment reportedly fell 30 to 40% after the coups. The fundamental tension: these governments need foreign expertise to run complex mining operations efficiently. IAMGOLD, Endeavour, and Barrick didn't just bring capital, they brought technical knowledge, global supply chains, and operational discipline that's hard to replicate. Mali's production collapse after the Barrick dispute shows what happens when that expertise walks away. So governments are trying to thread a needle, extract more value from existing operators, without pushing them out entirely. Some companies are adapting, others are quietly reducing exposure. For anyone following African mining or global commodity markets more broadly, here's what matters going forward. First, watch the arbitration outcomes. Barrick's ICSID case against Mali will set precedent for how international tribunals treat these seizures. If Mali wins or settles on favorable terms, it emboldens other governments. If Barrick wins significant damages, it raises the cost of aggressive nationalization. Second, track where the majors are deploying capital. Companies like Endeavour and B2 Gold are increasingly focusing on Côte d'Ivoire and Senegal, countries with more predictable regulatory frameworks. That capital reallocation tells you where the industry sees acceptable risk. Third, monitor the Russia dynamic. If Nordgold and other Russian operators succeed in Burkina Faso while Western companies struggle, it validates a two-track system, where geopolitical alignment determines who gets favorable treatment. That's a structural shift, not a one-off. Finally, watch Ghana. As Africa's largest gold producer, with functioning democratic institutions, Ghana's policy choices influence the entire continent. If they push toward more aggressive resource nationalism, it signals a continental shift. If they maintain a balanced approach, it offers an alternative model. Resource nationalism isn't new, but the current wave is different, more coordinated, more ideological, and backed by alternative powers willing to fill gaps left by retreating Western capital. For African governments, the logic is compelling. Why should foreign shareholders capture most of the value from your country's mineral wealth? For mining companies, the challenge is existential. How do you operate in jurisdictions where the rules can change overnight? Captain Traoré and his allies have made their bet that controlling their gold matters more than foreign investment rankings. The next few years will reveal whether that gamble pays off or leaves their countries with nationalized mines they can't efficiently operate. Either way, the era of easy extraction is over. Every company digging in Africa is now operating in a different risk environment. And the question isn't whether more nationalizations will happen, it's where and when. Next week, the DRC's mineral deal with America, what Washington's new agreement means for cobalt, copper, and the EV supply chain. Subscribe for African economic intelligence that cuts through the noise. I cover the stories that move markets from someone who actually understands the ground realities. I'll see you in the next one.